The Hypatia Women CEO ETF, Investing in Gender Diversity and Performance. In the ever-evolving landscape of the financial markets, socially responsible investing, SRI, has found its place as a force for positive change. Among its various dimensions, gender diversity has gained significant traction, with investors increasingly recognizing the potential of companies led by women. Enter the Hypatia Women CEO ETF, WCEO, a pioneering fund that taps into this promising intersection of financial returns and gender equality. This article delves into the Hypatia Women CEO ETF, providing a comprehensive analysis of its investment thesis, portfolio composition, performance track record, and potential drawbacks. It aims to equip investors with the necessary knowledge to make informed decisions about including this gender-focused ETF in their portfolios. Investment thesis: championing female leadership. The Hypatia Women CEO ETF was established with a distinct investment thesis: to outperform the broader market by investing in companies with female CEOs. This approach rests on the rationale that companies with women at the helm exhibit stronger corporate governance, higher profitability, and greater long-term value creation. Supporters of this thesis highlight several factors. 1. Diversity of thought. Women can bring unique perspectives and experiences to the boardroom, leading to more comprehensive decision-making and improved problem-solving. 2. Talent acquisition and retention. Companies with female CEOs often demonstrate a stronger commitment to diversity and inclusion, making them more attractive to top talent, particularly talented women in the workforce. 3. Risk management. Studies have shown that companies with women leaders tend to exhibit a more risk-averse approach, leading to more sustainable business practices and long-term stability. While research on the performance of female-led companies is still evolving, several empirical studies offer promising evidence. A 2019 study by Credit Suisse found that companies with at least one woman on the board outperformed their counterparts by 21% on average over a 6-year period. Similarly, a 2020 McKinsey company report revealed that companies with gender-diverse executive teams had a 21% higher chance of outperforming the national average. Portfolio composition: unveiling the underlying holdings. The Hypatia Women CEO ETF actively manages a portfolio of U.S. companies whose chief executive officers are women. It invests in exchange-traded equity securities, primarily focusing on companies with market capitalizations exceeding $500 million. This ensures a certain level of liquidity and stability within the portfolio. As of January 19, 2024, the top 10 holdings of the Hypatia Women CEO ETF include 1. Citigroup Incorporated, CE. 2. Progressive Corporation, PGR. 3. Equitrans Midstream Corporation, ETM. 4. Lincoln National Corp., LNC. 5. Bath Body Works Incorporated, BBW. 6. Best Buy Company, Incorporated, BBY. 7. AutoZone Incorporated, AZO. 8. Cadence Design Systems Incorporated, CDNS. 9. Cintas Corporation, CTAS. 10. Dollar Tree Incorporated, DLTR. The sectoral distribution of the portfolio reveals a broad diversification across various industries, including financials, consumer staples, healthcare, and technology. This diversification, coupled with the focus on larger companies, aims to mitigate individual company risk and provide investors with exposure to a range of high-performing businesses. Performance track record, measuring success. Since its inception in 2021, the Hypatia Women CEO ETF has enjoyed a strong performance track record. As of January 19, 2024, the ETF has delivered a total return of 35.63%, significantly outperforming the benchmark S&P 500 index, which has returned 24.22% during the same period. While past performance is not indicative of future results, the Hypatia Women CEO ETF's early success has garnered significant attention from investors seeking to benefit from both financial returns and a commitment to gender diversity. Potential drawbacks, considering counterpoints. It is essential to approach any investment decision with a balanced perspective, considering both potential benefits and drawbacks. The Hypatia Women CEO ETF is no exception. Some potential limitations to consider include 1. Limited data and track record. The ETF's relatively short lifespan means that its long-term performance remains to be seen. Additionally, the research on the performance of female-led companies, while promising, is still evolving and requires further data and analysis. 2. Concentration risk. While the ETF invests in a diversified range of companies, the focus on female CEOs inherently creates a smaller investable universe compared to broader market ETFs. This could lead to higher concentration risk within the portfolio. The potential for concentration risk within the Hypatia Women CEO ETF is a valid concern. However, the fund takes several steps to mitigate this risk. 1. Broad sectoral diversification. As mentioned earlier, the ETF invests across various industries, reducing dependence on any single sector and minimizing the impact of sector-specific fluctuations. 2. Market capitalization threshold. The focus on companies with over $500 million in market capitalization ensures exposure to established businesses with more diversified operations and revenue streams. 3. Active management. The ETF's active management allows for strategic adjustments to the portfolio, mitigating risk by dynamically adjusting positions based on market conditions and potential concentration concerns. It's worth noting that while concentration risk exists, research suggests that companies with female CEOs exhibit low volatility and risk aversion compared to male-led firms. This could potentially offset the concentration risk to some extent. Higher fees versus potential alpha. The Hypatia Women CEO ETF carries an expense ratio of 0.85%, which is higher than many passively managed ETFs. However, investors need to consider the potential for generating alpha, or excess returns, through the ETF's investment thesis. The ETF's outperformance of the S&P 500 since its inception suggests that its focus on female leadership may be delivering tangible value. It's crucial to weigh the higher expense ratio against the potential for additional returns when making investment decisions. Beyond performance, the societal impact. While financial performance is a primary concern for investors, the Hypatia Women CEO ETF offers a compelling ethical and societal dimension. By investing in companies with female CEOs, the ETF promotes gender equality and diversity in corporate leadership. This can lead to 1. increased role models for women and girls. Seeing more women in leadership positions can inspire and empower younger generations to pursue their own leadership aspirations. 2. Improved corporate governance. Studies suggest that companies with female CEOs exhibit stronger corporate governance practices, leading to greater transparency and accountability. 3. Enhanced corporate social responsibility. Companies with diverse leadership are more likely to embrace social responsibility initiatives, contributing to a more sustainable and just business environment. In conclusion, the Hypatia Women CEO ETF presents a unique investment proposition, offering the potential for financial returns while championing gender diversity and equality. While risks like concentration and fees exist, the ETF's strong performance track record, active management approach, and positive societal impact provide compelling reasons for consideration within a diversified portfolio. The ultimate decision to invest in the Hypatia Women CEO ETF rests with individual investors, based on their risk tolerance, investment goals, and alignment with the ETF's social mission. However, the fund's emergence within the SRI landscape marks a significant step towards a more diverse and equitable financial future.